Richard Harris as well, Chief Executive, Port Shelter Investment Management, on the phone line with us. Richard, good morning. Tamanna here. Pleasure to speak with you. It's confusing out there. I just want to understand the rationale, and if you think it's a bit of an, if it's overdone, the fright of a recession. Recession fears have cropped up in the last 48 hours for the United States. Is there any data that is backing this theory?
Well, I think it is very early days in terms of talking about this sort of thing. And yes, there is some data backing up a slowdown. I think because of what we've seen, the uncertainties that have occurred, really since the elections, that there is a possibility that we could see zero growth in the U.S. In the first quarter. But, a real recession has to have 2 consecutive quarters of negative growth. And I think it's far too early to say whether the second quarter is going to be the same. But certainly we're in a situation where markets have moved on a long way in the U.S., where tech has moved up significantly. And now, as we saw last night and over the last week or two, it's moving back. So I think we are seeing some correction from high levels that may well lead us towards maybe as much as a 15% fall because of the concerns we may see some kind of recession coming through.
Saying the recession fears could take place depending on what happens and whether those tariffs are actually put into place. Where does that leave emerging markets, Richard? Because if so far the story was that all roads lead to America at the cost of emerging markets, does the reverse bode well for emerging markets at all?
Well, it is slightly difficult to focus on that because, of course, emerging markets have changed dramatically in the last few years. Most of these emerging markets have become developing markets and into even developed markets over the last 5 or 6 years. So whether we're going to see the same sort of thing happen is not clear. I mean, the U.S. economy can slow down, can decline, and it will have some impact fundamentally on the Chinese economy, on the Indian economy. But those economies now have a very strong domestic base. Exports are only a relatively small portion of the overall GDP of both of those. So you would have thought that those 2 markets especially would remain relatively robust, even in the face of a slowdown in the U.S. But I think it's fair to say that it would be very difficult for those markets to move ahead if we were seeing recession in the West.
Right. So recession in the West, that's key, and the uncertainty is something which is not letting markets decide any direction as well. Thank you, Richard, so much for joining us on the show and speaking to us at NDTV.